Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Thursday, the 31st of August. All right, now the US economy, not as rosy as the previous picture was painted, right? So we're starting to see some weakness across the board, and this is going to really impact, obviously, the bonds, Fed expectations for future rate hikes, etc. Now, the ADP national employment numbers came in at 177. Now, expectations were 195, so it's not far off. And it is sort of almost bang smack in the range, but it's enough to really get things blowing over. Now, one of the other things is the prelim PCE price index number, lower than the forecast. The GDP deflator prelim numbers were weaker, and the second estimates of GDP also weaker, right? So you're getting tiers of second and third tier numbers that are all coming in below expectations. So it paints a picture that things are stalling, as we thought about a month ago. And then we started to see a few numbers coming in strong. All of a sudden, everyone's jumping up and down. The Fed are going to have to raise rates. Well, it's starting to look more like, you know what, the job may be done. And the Friday's non-farm payrolls will really sort of go a long way towards that, right? And the PCE prices prelim number there as well, also a little bit lower, right on the low end of expectations. So this has done a number of things, right? It's sort of really confirmed the weak dollar outlook. US equity markets indices have rallied across the board, right? And you're going to see that flow into the Asian equities, and well, it hasn't really sort of ticked through the European equities because there's some different things happening there with the euro. Euro inflation, well, a little bit stronger, right? So that's going to push equities down a bit in the European section there, right? So just understanding the connection between interest rates and equities is very important. Now, there's some key moves here. On the currencies, euro and sterling reacted very well, okay? Most importantly, sterling, which was really suppressed and in a sort of downward spiral, now it's back, right? Aussie and Kiwi, they did spike, but they sort of stalled afterwards, right? And we do have the non-farm payrolls afterwards. Same with dollar CAD, right? So is it a risk-on, risk-off profile? Well, sort of, but not, okay? And let me show you the charts to sort of explain that, because it's what we are seeing, right? So the Aussie and Kiwi, we know we're already trading heavier than euro and sterling. Now, we did get the spike up, and the market obviously wasn't expecting this sort of clean out, but they did retrace pretty quickly, whereas euro and sterling are holding their ground, which tells me these two currencies in particular are ready for a potential much bigger move to the top side if the US non-farm payrolls data comes in stronger, right? Now, there's some more US numbers and things coming out later today, but you can see here, clean out in the dollar index, right? If you were hanging on for the non-farm payrolls to get you back in the game, well, you're probably already taken out here. And you're seeing that move in dollar Swiss, dollar yen, a little brief move and then retrace, but dollar CAD to the downside there as well. Matches up with oil sort of rallying as well, right? Stronger CAD and weaker dollar there paints a pretty clear picture. The equity markets loved it, right? Love the news of weak data, right? So sort of, once again, fresh moves. Technically, the S&P and the NASDAQ are trading technically extremely well, right? This whole sort of risk-on profile has got the cryptos moving topside, although they have now sort of stalled around 27,500 there, the Bitcoin, and a bit of sort of choppy price action here, but back to sideways there for oil and gold. Well, I guess there's a bit of uncertainty now around what's happening in the US, going from potentially raising rates to maybe not at all, is creating a little bit of disharmony there and people buying gold. So that's where we are on the major instruments right now. If I just come across here, you're sort of just following the dots, right, in the lead up to the non-farm payroll. So we've got all those weak US numbers coming into play, and this is the beauty of a trend. If the data keeps trending, weaker numbers, well, it will finally break the camel's back. The Fed will stop talking about raising rates, and they'll talk about, you know what, we're actually done. So that's what we need to focus on. But today we have a broad range of economic numbers, okay? Now, ANZ business confidence numbers, I'll be looking at all those. Housing credit, it's a third tier number at best in Australia, but this little group of numbers are all associated with the Aussie and Kiwi, right? So, and that's bringing in the manufacturing numbers there from China. Okay, so if you're in the Australasian session, you're going to have some numbers to work with there. You come into Europe, German retail sales, Swiss retail sales for sure. Just keep an eye on a couple of these central bank officials speaking. The German employment numbers, usually very consistent. So if we see strength or weakness in these employment numbers, well, that's something, right? Because the German economy is very structured and sort of uniform, if anything. It doesn't really sort of change that much. So if there are changes, it's important. And that is followed up with the Eurozone numbers, right? The inflation numbers, the employment numbers, and don't forget the ECB monetary policy meeting accounts. Now, so what they do is it's a very smart thing. They meet outside of their normal one every month or 4 to 6 week meeting, and they have meetings every other week. But it's not about changing policy, but it's about keeping the discussion flowing. So if they see things changing, they will come up in the in this release, right? The meeting accounts, they call it. It's like not exactly the minutes, but very similar. And then as you come into the North American session, right, this is like the last big piece of the puzzle before the non-farm payrolls. We've got a whole range of US numbers, okay? Personal income, personal spending. To me, the PCE price index numbers are key. Now, we just had the prelim numbers out, like softer. If this PCE price index number confirms softer numbers, well, you know what? The non-farm payrolls won't be a nothing, but the market will already be selling dollars across the board and focusing on the inflation numbers, which usually follow suit with this number. Okay, so that's where the whole sort of change can come into play. And don't forget, this week's been all about jobs. We've got the weekly jobless claims. Now, traditionally, a third tier number wouldn't move the market, but now we're seeing fluctuations of 10,000 here impacting the market. So if the number is lower than 235, like say 225, it confirms the job jolt openings, the ADP employment change. Everything is suggesting employment is falling across the board. This is probably almost right up there with the PCE price index, right? So just understand, if you're trading the North American session here around these releases and trying to gauge what's happening and where direction is going to come from and momentum shifts, you've got a number of releases here you need to manage. This is not, well, I was going to say, it's not too dissimilar to the non-farm payrolls. It's a bit of a precursor, because what you've got is you've got, 1, 2, 3, 5 or 6 variables here that are really going to come into play. Now, at this point in time, if this was my calendar, I would definitely have the jobless claims as a high impacting number, right? Because we've seen what's been happening with the other employment numbers, right? This is the last port of call before the non-farm payrolls. It's pretty huge, right? So the trading day as a whole, you don't need to go looking for trouble. Let the markets come to you, right? There's something for everyone here. When I'm talking about potential shifts in momentum or determining direction. So when you are looking at your major instruments, make sure you just go across your technicals, find out the ones with the best technical setups and go from there, right? Sterling's in the balance. Euro is, to me, looks ready to go topside. So I'll be looking for opportunities to get onto that. If the US numbers, for some weird reason, sort of all came out really strong, well, this is good too, because we know what's happened. So you'll see a correction of these recent moves, and that's what you can plan. And your trade plan should reflect that, right? Don't start thinking it's going to fall 200 points. It just corrects the previous move, right? And that'll be the same on the dollar index, dollar Swiss. Well, Aussie and Kiwi, just bear in mind, these things have already sort of slightly corrected, so they may not sort of move too far, but a lot of the other instruments will, right? And once again, if these numbers are strong, you're going to see some correction there in the equity indices there as well. All right. So you just got to work out what instruments you really feel comfortable with and confident, then look for the best setups, and then basically watch the numbers. If the numbers come out, support the move or not. Now, just bear in mind too, factor in numbers that come out as expected, right? that's what you've got to do from here, is actually really sort of focus on where the action is. And if the numbers do come out as expected, well, the instruments will stay exactly where they are, right? Anyway, it's been a pretty good week, I think, as far as all these numbers have come out, because it creates action, right? It stops the news services just coming out with sort of bullshit news to try and fill the void. So I've just got the news squawk up here. Just go through your numbers. Now, don't forget, the range is super important. Expectation, obviously, the key number, but the range, if the numbers come outside the range, you're going to get a bigger, consistent move. So when you're looking at the PCE price index, year on year, month on month, the jobless claims, as I said, that's a big one, especially outside that range, will get things rocking. And yeah, piece it together, guys. We've got the activity, so you now no longer need to try and make things move. They are moving for us. So you need to identify entries, direction, and away you go. Good luck. All the best. Cheerio.